When the Reserve Bank cuts interest rates, as it did this week, the expectation of many homeowners is that their mortgage payments will automatically follow, and quickly. But the ANZ has moved to dispel that assumption, saying it wants to review rates on its own timetable, independently of the RBA. ANZ says that'll create more predictability and flexibility, but consumer groups aren't buying it. Here's finance correspondent Philip Lasker.
It hasn't been a good week for the bank bosses. Government and public pressure forced a full cut in interest rates, but the banks may yet have the last laugh.
We do want to attack this issue about the automatic linkage between RBA cash rate movements and mortgages.
The ANZ now reserves the right to change its variable home mortgage rate every month, no matter what the Reserve Bank does. That means it could claw back some of this week's rate cut next month, if it chooses.
Oh, look, it means that anything's possible, but ANZ isn't going to become uncompetitive.
But the chairman of mortgage broker Aussie says ANZ's move makes good commercial sense, given the uncertainty of global money markets and the need to properly price their loans. But will others follow?
I don't know. I'd be surprised. One of the major banks today has said that they will not.
I'd be surprised if they didn't follow ANZ.
And that worries consumer groups.
If all of the four banks move on different days, on different weeks, with different systems, that will really diffuse the kind of political scrutiny and heat which has actually delivered a benefit this week.
It's also delivered a benefit to the smaller players.
Our call volume for the 2 days since the RBA move have increased by around 25%, and our hits on our website have actually increased by 57%.
But don't expect a seismic shift.
It's like a corner store versus Woolies. And let's face it, the corner stores haven't got enough stock to supply the demand of Australians.
And the big banks will make sure it stays that way. Philip Lasker, ABC News.